Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So let's just say that we wanted to look at, let's take a look at the Australian dollar versus U.S. dollar. So U.S. dollar over the Australian, and that's was trading around 107. If you wanted to look at U.S. over Canadian, that was par, although now it's around 102. U.S. over Japanese yen was 93.35. These other ones, the Aussie and the Canadian, the Swiss franc, we multiply those by 100 to come up with 107, 100, $106 pair value that you can trade. We trade the euro in two different ways. We trade it as the U.S. dollar base and a U.S. dollar quote. So we also trade the euro over the dollar. So we can trade it either way. You'll see over here, and that was 134. Of course, that's a lot lower today. It's around 123 to 124. Here's a chart from this morning. Yeah, and Andrew says, do we trade the peso? Absolutely. We do trade the Mexican peso. AUM, so here's the chart of the Australian dollar. This morning was trading 88.34. It came well off its high. We ended up at 87.65, so significant sell-off, and there's a chart over the last 9 months or so of Aussie versus U.S. And these are taken from livevolpro.com. So here, if you take a look at this chart, pound dollar, what you're seeing is the pound is obviously weakening. So what you want to look at is the numerator denominator. If the trend is going down, that means the numerator is weakening and the denominator is strengthening. And that's the case in the British pound. GBP, so 148.39 earlier today and closed at 147.58. So the pound did weaken. Canadian dollar trading 101.45 earlier this morning. Closed 102.42. So the U.S. dollar rallied a bit. So if you're bullish on the dollar, you might be looking at call options. If you're bearish on the dollar, you might be looking at put options. Of course, you could do some selling of options also. Well, this was the trade of, I don't want to say a decade, but definitely a trade of the year. If you were bearish around Thanksgiving or during Christmas in the 140s here, could have bought the 135 puts, and of course, we traded as low as below 120 there for a while. So again, if you're looking at this, the puts were the trade for most of this year. If you believe that if you believe that the market's going to rally back, you might be looking at calls here. If you're looking for the market to move back in the 130s, you might be looking at calls. If you think it's going to parity, Mr. Jack Crooks, who's a frequent guest here at the ISE, believes that sometime in the next 12 months or so, the euro might even go to parity. So if you had that view, you'd be looking at put options. Japanese yen, and that symbol is YUK, and that's the symbol you'd have to type into your equity options brokerage account. It's pretty stable there in that 90 level, 91, 92. So just to go back, dollar base is per U.S. dollar. Dollar is in the numerator. Dollar quote. The dollar is in the denominator in the equation. The U.S. dollar base, if you take a look at dollar base divided by the quote commission, determines a selection of calls or puts. Very, very important. I like to say, look at the base and then determine your view of the base. So here, what's your view of the base? If you're bullish on the dollar, you'll be looking at calls. If you're bearish on the euro, you'll be looking at puts, but if you're bullish on the euro, you're looking at calls. I hope that's pretty straightforward. I see some questions rolling in. I'm going to answer all the questions in the next 10 or 15 minutes, so thank you very much for the questions. Calls or puts, so you look at the base, decide what's your view of the base relative to the quote, and then you decide calls or puts. So there are a couple ways to trade them. Dollar base, let's say it's U.S. against the Canadian, CDE. If you're bullish on the U.S. dollar, you could buy calls if you're expecting more volatility, or you might sell puts with more risk, or you could sell put spreads. Dollar quote, let's say as an example of EUU, if you're bullish on the dollar, you'd be selling calls or you'd be buying puts. Calculating the ISE pair values, we use a rate modifier. So most of these are multiplied, that exchange rate is multiplied by 100. Then we have one that we don't modify. I'm going to put a little sort of yellow, means we don't do anything here. YUK, it is what it is. The peso is going to be multiplied by 10. So I'll just note that. And also the Swedish krona by 10. So all of the currency pair values are multiplied by 100 except the peso, Swedish krona multiplied by 10, and the Japanese yen is multiplied, is not modified at all. So we have the in US, and that's with the dollar as the quote currency, AUN, EUU, GBP, and NDO. So you might have the exchange rate trading at 152.65, at least when I built this slide, although now the British pound is much cheaper, well not much, but it's cheaper at 147. Contract size is floating, which means that you multiply the pair value by 100 or by 10, or maybe you don't modify it, and you come up with the option value, the notional value. So let's look at the Australian dollar, AUX. US dollar against the Australian. There's two ways to trade it. We can trade AUX, which is the dollar base, or we can trade the dollar quote. I'm going to just look at all the dollar base, and you notice that right here, all dollar base. So the example of the notional size, the biggest contract is going to be Brazilian real. Smallest contract would be the British pound, roughly. I mean, this is that, but these numbers are going to change slightly because we multiply the pair value by 100 to come up with what the contract's really worth. And that's, you need this for hedging purposes only. If you're just trading based on your view of the dollar versus another currency, it's nice to know how much money that you have at risk, but maybe you're not hedging your whole portfolio, so you know your real risk is just, if you bought 10 options at 2, you have $2,000 at risk. So these are the dollar quote. And you can see that right here. And this is a great chart, slide 40, of our current offering. So you can trade Aussie in either AUX or AUM, pound in BPX or GBP, euro in either EUI or EUU, and New Zealand dollar in either NZD or NDO. It's not really all that complicated. So you can either trade based on the per US, or you can trade based on in US. And that is completely up to you, which way do you feel more comfortable?
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX Options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.